What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we saw the bulls pushing through some very critical resistance after we had that CPI data report. Are the bulls ready to scare away the bear from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 5.5%, and as I've been saying, the bulls have everything to prove, and the bulls did just that today. We had the gap up open and we closed at the high of the day, and we sliced right through that critical risk level at 390. Now, if you take a look at the volume, we did go up on increasing volume, so there was very likely a lot of people caught on the wrong side of the trade today. So right now, we need the bulls to hold the breakout level at 390, and we are off to the races, which means we are more than likely going to at least fill this gap at SPY 408, which is synonymous with retesting the negatively sloping 200 moving average. Now you'll notice the bear is on its last leg trying to defend this level around 390, and this bear is going to retreat back to the resistance trend line, which is going to be right around SPY 410 to 412 if the bulls can hold above 390. If tomorrow we reverse and slice right back down through 390 like it's not even there, not acting as support, then this is nothing more than just a false breakout. However, if you look at the volume and you look at the price action, this is clearly higher lows and higher highs on a bull breakout. We broke the resistance trend line and we broke the critical risk level at 390. So this is starting to look like the real deal bull breakout. So right now, if you're bullish, you can continue to maintain your risk level above 378. But if you want to be a lot more risk off, you need to up your risk level at the risk level here at 390. Below 390, you'll be looking for the gap fill at 381, which is also the 50 EMA of support, or the retest of the breakout at 378. If you're looking at SPY as a giant double bottom off of 357 and a break above this neckline at 378, it does mean that SPY can continue to push into the 400s. So this bear is on its last ditch effort to defend this resistance level before it retreats back above the 200 simple moving average, which does officially mean that the bulls have full advantage of the short-term trend, which is higher lows and higher highs. If you're bearish, you need to instantly defend this risk level right here at SPY 393 to 390, because if the bulls can turn this level into support, there is absolutely nothing stopping the bulls from pushing above 400 and fully closing that gap above. On the NASDAQ 100 triple Qs, we were up a whopping 7.38% today, and we can see the triple Qs also slice through some very critical resistance, being the resistance trend line at 275, the 50 EMA at 280, and the resistance right there at 282. So like I continue to tell you, the bulls had everything to prove, and prove it, they did just that. So right now, this is going to be looking like a double bottom off of 260 if we get the breakout above 284. That could easily send us up to battle the bear at 293, defeat the bear, go close the gap at 308, and test the 200 simple moving average. So the bulls have full control in the short term with such a bullish day on high volume, but there is going to be this gap below right around 268 to 269 if we cannot hold above this breakout level at 279 to about 275. So the bulls are getting the push in the short term on high volume, but the bears will not just roll over and give this market away to the bulls without a fight. So I continue to expect there to be plenty of volatility. Watch this critical support level around 282 to about 279. And if we break down below that support, look for a retest of the breakout of the resistance trend line at 274. On the Dow Jones, we were up 3.66% today, and the Dow Jones did close the gap at 366. And there's one more gap to close, which is going to be right around 339. Above 339's gap close, we have the previous daily high at 342. And as you can tell, the Dow Jones is already looking very bullish after the double bottom breakout above the neckline at 303, and it's been higher lows and higher highs ever since. Now we did get a gap up and close near the high of the day, so we do have a gap to fill just below 331, and we also do have this gap to fill all the way down here at 311. Whether or not these gaps get filled now or at a later date is to be determined, but we obviously know gaps typically get filled, especially this gap that's going to be right here below 331. It is very hard to imagine a market that does not fill that gap. So watch the gap above at 339, and once that gap fills, if we don't fill the gap lower first, I would expect to see a sharp rejection to fill the gap below 331. For that reason, that's going to be strong support for the bulls. And if the bulls fail to hold that support, look for a retracement all the way back to about 324. On the Russell 2000 IWM ETF, we were up 6.16% today, and I continue to tell you this looks like a double bottom breakout as long as we're above the neckline at 176, which is starting to make yesterday look like a bear trap with a false breakdown below that neckline. and an instant reversal all the way back up towards our price target at the gap fill at 188. Remember, markets are full of traps and you just need to be aware of that. That's why I always tell you wait for that second day of confirmation. So at this point, we do have a gap to fill to the downside just below 179, but it does look like with the higher lows and higher highs, the bulls are going to try to push through 186 and fully close the gap at 188. If we get a rejection from the negatively sloping 200 simple moving average at 186, look for the gap fill to the downside around 179. On the Arkk ETF, we were up 14.52% today, and Arkk did gap up and close near the high of the day. And even after such a bullish day on high volume, we still aren't even close to the bullish breakout above 38. So this just reminds you how deep in a bear market the Arkk ETF is, because even after such a strong rally, this is still just another lower high. So look for strong resistance around $38 and $40. And we do have a downside gap to fill around 34 if we do get rejected and break back down below support at 36. On the VIX, we were down 9.82% today as we see the VIX rejecting from the 200 simple moving average, and it still looks like lower highs and lower lows with the VIX breaking back down below 24. And I did tell you the VIX below 24 is going to favor a bull rally. So right now, watch the VIX to continue to try to crush down lower, especially to fill the gap, which is just above 21, because that gap is very likely going to get filled in the near term while the VIX is below 24. On Bitcoin, we have a much better story in paradise with Bitcoin trading back above our support level, which was right here at 17,200. Yes, we did undercut it by quite a bit yesterday, breaking down below 16,000, but we're getting a high volume buying day below the lower Bollinger Band, and we're right back above that support. This definitely looks like a flash crash in Bitcoin, and if you're new to the crypto market, get used to this because this is quite normal, and these are usually going to be buying opportunities when you see high volume selling, because everybody is capitulating and running for the door, and that is your opportunity to start going long. If we continue lower, we're going to break down below the support at 17,000 and very likely hit that support level just above 14,000, and we still do have a valid downside price target at 12,000 while we're below 19,000. However, this is definitely high volume buying after high volume selling, so it's anybody's guess where we're going from here. So do look for the next resistance right there at 19,000 while we're above 17,000. On Amazon stock, we were up 12.18% today with a very sharp bounce off of that support zone around $88, and we did leave a gap to fill just below 90. Now we do have gaps to fill to the upside as well, which is just below 110, and we do have strong resistance right here at 102. This is clearly still a downtrend, so even though we did get a high volume bounce today, there's no guarantee it's not just a lower high before the next lower low. And we do have a valid downside price target at 77 as long as we're below 102. So essentially, Amazon is a trading range between 88 and 102 until we get a breakout. So expect there to be plenty of volatility until we get a bull breakout above 102 or a bear breakdown back down below 88 to 86. On Microsoft, we were up 8.23% today with a gap up and close at the high of the day, and we did break some very critical resistance, which was the critical resistance trend line at 240 and the critical resistance level at 242. We gapped up well above 228, so there is still going to be a gap to the downside, so you will want to manage your risk as a long trader right here at 240, which is the breakout of the resistance trend line. If we continue higher, look for the next strong resistance at 252, and above 252, we're off to the races to close the gaps in the 260s. On Nvidia stock, we were up 14.33% today with a very impulsive bounce above the resistance at 145, and we did slice right through that critical risk level at 156, and we're way outside the upper Bollinger Band. All of this happened on increasing volume, and earnings is right around the corner, so whether or not this is a bull breakout or a test of resistance before we go down lower before earnings is to be determined, so manage your risk right here around this level at 156. If we start breaking back down lower, look for the gap fill at 142, which will require a breakdown below that support at 145, with the next upside resistance right here around this level at 160. On Tesla stock, we were up 7.39% today, completely erasing yesterday's sell-off, which was way too oversold below the lower Bollinger Band. And I did tell you that was very likely going to be a great buying opportunity because we're just getting way too oversold to the downside and due for a bounce. Today, we saw high volume buying outdoing the last 2 days of selling, and we're right back above that price target at 187, which means we're very likely well on our way to fill the gap at 196.6. Above that, look for strong resistance just below 205 and right around 209. And the bears are still in full control as long as we're below the resistance trend line around 215. If we do continue lower, look for strong support around 180, and below that, I think we will see a very strong bounce off of 173 if we do in fact get there. On Apple stock, we were up 8.9% today as the market moving behemoth has completely sliced right through that gap fill at 145 and went all the way back up to the resistance at 147. 147 is definitely a resistance level the bears can step in at, and we do have gaps to fill to the downside at 138 and 133. So don't be surprised if we see Apple getting rejected and coming down here to fill these gaps. But as you can tell, there's definitely high volume buying, and we did hit a very strong support level down here below 136. So if we do continue back above 147, look for the next strong resistance at 150. On the financial sector, we were up a whopping 5.05% today, and we are back over the 200 simple moving average on a gap up and close near the high of the day. You can see this all happened on increasing volume, so this is obviously very bullish, but we do have a gap to fill to the downside right around 34.4. On the industrial sector, we are up 4.2% today, breaking above the resistance trend line and the resistance level right around 99, but we do have a gap to fill to the downside at 97, and we are obviously in a bull trend with all of the moving averages stacked to the bull side. The healthcare sector was up 2.54% today, getting that bull breakout above the resistance at 134 and starting to build up that full bull trend. The energy sector was up 2.23% today, bouncing off of that support zone around 87 to 88, and we're right back down below the 5 EMA, but we are still in a bull trend, so stay bullish as long as we're above 87. So jumping back over to the S&P 500, as I continue to tell you, the bulls have everything to prove, and the bulls did just that today. We had high volume buying and we broke through some very critical resistance. So right now the bulls just need a second day of follow through, and this bear will start to retreat back above SPY levels of 410 to 412. Remember, price action does all of the talking and we follow the trend direction, and in the short term it is very obviously higher lows and higher highs with a bullish price action breakout above the critical resistance levels of 390. That is 100% objective, and I don't care if you agree with it or not, the charts don't lie. And right now the charts are favoring the bulls. Also, don't forget I have Bank Trade Alerts, which is an algorithm driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.